Gordon Wilson is the Managing Director of Carbon Financial Partners Limited, formed in 2011. The head office is in Edinburgh, and I caught up with Gordon to discover more about Carbon's history, services and philosophy. All right, Gordon, thank you for talking to me. Tell me about your own background.
Well, I came into financial services in about 1990 as a graduate trainee with the mighty Standard Life. I came into it completely by accident, but the reason I joined Standard was it was good training, and it set me on the track, got my exams, and then I moved on. I'd always wanted to be independent, and of course working for a big institution, you're not. So I set about working for a number of firms, big national firms and smaller regional firms, and spent the 90s finding out where I wanted to work. And what I found out after about 10 years is I wanted my own business, and I wanted to be independent. So that began in 2000. 2000 I built the business up, bought a few businesses, grew the business organically too, and sold out in 2008 to a building society. That didn't work particularly well. So in 2011, with their permission, I founded Carbon with some fellow directors, October 2010, and we began trading in June 2011. So Carbon's just coming up for 4 years old.
So tell me about the philosophy then of starting up Carbon. What was it?
Well, we wanted a fresh start. We wanted to look completely different. We thought there was a gap in the market. We didn't think there was a brand that really stood out. We thought the industry was pretty tarnished. And, we called the business Carbon because we wanted to convey being in the black. That's where we want our clients to be. We thought, Carbon, strong, stable, in its purest form, it's a diamond. We're all about transparency and telling people how it is, what things cost, what they can expect. And we wanted to make the link between science and investing. We think the investment world's full of people who crystal ball gaze, but we would rather base our clients' futures on academic research, on evidence, and for us it's all about the numbers.
You mentioned clients. Who are your customers?
Typically, they're people at the stage of their life where the kids are gone, they're starting to relax a bit, there's a bit of daylight between income and expenditure, and they can start to think about themselves rather than just day-to-day managing the school fees, the mortgage, all the expenses of life. They now need to think about themselves, and we can help them plan for that. We can talk to them in terms of their objectives, their aspirations, their ambitions. What would they like to do in retirement? Whether that's spending time in the south of France or, sea trout fishing in Tierra del Fuego. What we want to know is, how does life look to them in retirement? And then we can cost it all, bring it back to the present day and work out what they need to do to get there. And we'll build the plan.
Tell me about the services, because again, someone watching you might be thinking it's very complicated. Someone's going to give me really complicated stuff. Is it a case of providing something that simplifies what you can do? Is that it, the services?
If we give somebody something complicated, we're not doing our job. I think we need to give people straightforward, simple advice in clear language that everybody can understand. We're about solving problems, not creating problems. People might come with a complex financial scenario, but we should be able to help break it down and make it simple. There's nothing particularly complicated about it.
Tell us more about cost. People will wonder, how much do you charge?
Mm-hmm. Well, how much we charge depends on what the job is, but for us it's really important to tell people what things cost before we do any work. So if you came to me and you had a really straightforward set of circumstances, all you wanted to do is invest some money from cash, then there wouldn't be a lot of cost in that. If, however, you had multiple pension schemes, various investments, you had some tax vehicles, then there's going to be quite a lot of cost. So what we would do is understand the situation. We would, if you like, scope the job, and then we would advise you what the work was going to cost. But not just tell you what it's going to cost, we would tell you what you were going to get out of it, which I think is really important. And if you can't see the value in that, you just shouldn't do anything. But I think that's how everybody should work whenever they consult any kind of advisor. You need to know what's in it for you, and the fees have got to be substantially less, or you just shouldn't be going ahead. If it's not clear, don't do it.
So the cost, what you're saying, should always be less than the benefit to the client?
Substantially, yeah.
Really? Substantially?
Yes. Oh, absolutely. Yeah.
Gordon, I'm guessing one way people could have a look at your firm and wonder about it is, have you won any awards?
Yes, we've been very fortunate in our short history to win a few awards. We've just actually won the Advisor Firm of the Year for the UK 2015. That's the Professional Advisor Award. So Barry O'Neill, our investment director, was down in London at the brewery collecting that award. That was an extremely proud moment for us. We'd been shortlisted in the Advisor Firm of the Year Scotland, which we'd won the previous year, so we were Advisor Firm of the Year Scotland 2014. I thought it would be a bit of a challenge to win it 2 years on the trot, but in fact we did better than that. We won the award and we got the national award too, which was fantastic for us.
How can you be that? Because you're not the biggest firm in the world, you're not based in Switzerland. How can a Scottish firm be the best?
Well, I don't know, but we'll try really hard to be the best. We're a small firm. I think we punch above our weight. We say things that the market doesn't like.
Like what?
Like traditional investment management doesn't work. It's a complete waste of money.
In what way?
The cost of investing through a traditional fund manager is just too great. You have to get so many decisions right that you'll never win that battle. You'd be much better, for example, investing in a fund that tracked an index rather than paying a fund manager to try and pick shares that are going to beat the market. There's so much academic research out there that proves that it's just not possible. And that if you get it right, it's probably down to luck. So we are different. We're challenging perhaps the traditional beliefs because everything we do is based on evidence. I think too many people just accept what people say and believe rather than, look at the evidence.
Are you saying the fundamental investment model that me or many other people would look at or buy into and buy a slice of some big fund manager's portfolio is fundamentally flawed?
Yes.
Really?
Absolutely, yes. Warren Buffett says, if you wake up in the morning and look in the mirror and you don't see Warren Buffett, you should be investing in a tracker. And I think, that's something lots of people should listen to. They cost a fraction of what a fund manager would cost. A fund manager's performance is based on quarterly performance reviews. You're in investment for 30 years. Your objectives aren't aligned. The cost of trading typically doubles the fund management costs. So you're probably paying in excess of 3% a year when, shares don't return much more than that above, gilts or risk-free assets over the long term. You can't win.
Let me get this in my head for everyone again watching. Are you saying come to a firm like yours or your firm and you will outperform a fund manager?
Yes. An index tracker will outperform a fund manager on 2/3 of occasions over most time periods. That's fact.
Give me your firm's philosophy then. You started this firm, Carbon, it's going really well, winning awards. What's the next stage? Have you changed the way your fundamental view has taken shape?
No, I mean, to get back to the fundamental view, I suppose our view is what we do is we put the client first. We do the right thing for the client. We do for the client what we would do for ourselves in their position, and then we charge a fair price. And it's as simple as that. Beyond that, we have people who I think are among the best in the business. So quality is really important to us. Professionalism is really important to us. Ethics and doing the right thing is really important to us. And they're the building blocks for the business going forward. We're driven by trying to become the best in the business. I don't know how we'll ever measure that, but I don't think it matters. If we're constantly striving to be the best in the business, then I think we'll end up pretty good. And if we're good, or at that level, recognised in the UK, then we'll attract the best financial planners, the best paraplanners, the best support staff, and we'll attract clients. And growth will come as a consequence, but we won't compromise on quality. I think too many businesses like ours have an ambition to get $1 billion or billions under management, whatever it might be. There's a funds under management target or a revenue target. But as soon as you start chasing size, I think you really risk compromising on quality, your reputation, and that's not where we want to be. If we grew steadily, but we were recognised as one of the best in the business, we'd be happy with that. Quality is paramount.
Most of us really enjoy our work. I enjoy my work. What do you get out of what you do? Which sounds like quite a complicated world where you're trying to keep people happy and give them good advice. What do you get out of work?
What I get out of work is seeing people who lead effectively more fulfilled lives, who achieve their objectives, maybe achieve things they never thought they'd be able to achieve simply through understanding money and how much they've got. We spend more time encouraging people to spend more money, take more holidays, look after their children and grandchildren better because they can afford to do it. So what, makes me or gives me job satisfaction is seeing people do that. I had one great example recently where one of our clients' ambitions was he wanted to go to Augusta. So what we did was we arranged a lunch with an accountant I know who's got property over there. They got together and all of a sudden our client's away to Augusta to fulfill a lifelong ambition. So for us, unlike most firms, it's not about boosting assets under management or getting the money invested. It's about helping people enjoy money, understand money, get rid of the worries associated with money, which can come whether you've got a lot or not very much at all. So it's just helping people relax, helping people sleep at night, and seeing them go away happy.